What's going on, everybody, and welcome to the video. In this one, we're going to be talking about a pretty big stock already, dividend stock with a nice yield, nice payout ratio, looking like some pretty solid things, and a stock that I very likely am going to be adding in my portfolio in the next few days. If we just go to my dividend portfolio, I mean, as you can kind of see, we've got the tech and cloud computing, and this would fall under the banking and fintech. But I'll ask before we get into the videos, if you do enjoy this type of content, that you subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. But let's kind of go ahead and get straight into it. So the stock we're going to be talking about today is Rowe Price, ticker TROW. I'm sure you've heard of the name, pretty big financial asset management company, investment management. And a few key things I wanted to point out before we go into some other stuff is it's about a $29 billion company, pays $4.80 in dividends per year with a dividend yield of 3.81%. Now, I wanted to point out they have a forward PE of 17.5, and earnings per share this year have increased 31.5% from FinViz's information, but sales quarter over quarter and earnings per share quarter over quarter have decreased pretty big amounts, 18.7% and 50%. Not numbers that you necessarily like to see. We'll be getting a little bit deeper into why that is. And a profit margin right now, a very high profit margin of 36.5%, which is another reason why I think, even with this company having some pretty big downfalls just over the past year, investment management, we know markets have not done that well. So it is very difficult for these companies to kind of increase sales, increase earnings in a market, in an environment like this. But just showing you a little bit more on Rowe real quick. Looking at it, today it's down 2.2%, but over the past 5 days, it's up 8.38%. In the past month, it's up 9.5%. However, you kind of zoom out a little bit more and we just look at the year, we still are down 19%, which I do think long-term wise does offer a pretty nice buying opportunity. If we look at the past 5 years, still up 19%, but just from its high, around September and October, November of 2021 till now, down 44%. So let's go ahead and look a little bit more into Rowe Price and who they are. So they're a global investment management organization with $1.8 trillion in assets under management as of December 31st of 2022. So, you're a pretty big asset management company, taking money, investing it, and making money with that money. So showing you a little bit about their dividend, we'll see they pay out $4.80, as we said. Payout ratio is just below 60%, which seems to be very solid. A dividend growth streak of 36 years. That's very good. Dividend aristocrat, really like to see that. And a 5-year growth rate on their dividend of 16.05%. Now, I wanted to point out something that seems to be coming up soon would be a dividend increase. So we'll see right here, as their most recent 4 dividends, they've all been $1.20. Their most recent increase was from $1.08 to $1.20. And then hoping coming soon, their most recent dividend was paid on December 29th. So assuming it to be paid around March 29th, around that date for 2023. And that would be the hopeful increase in this dividend. Who knows how high they could increase it, but I would really like to see them announce this. So looking at their most recent earnings report and things like that, year-end assets under management of $1.7 trillion, net revenues of $1.5 billion for the quarter and $6.5 billion for the entire year of 2022. Diluted earnings per share of $1.16 and $6.70 for 2022. Some pretty solid numbers. I mean, they just paid out $4.80 in dividends for each share, and $6.70 was their earnings. So definitely a nice little margin of safety that they're not taking on too much leverage or too much risk to pay that dividend. Returned $387.3 million to stockholders in Q4 2022. $111 million of this was share repurchases. And for 2022, they've spent $855 million of share repurchases, which is just incredible value to the shareholders, and indicating, each share you own is now worth a little bit more in value of ownership in the company, which is a very big thing that we do like to see. And let me show you a few things from their most recent financial highlights, their income statement. Earnings per share from 2022 to 2021, the past quarters, decreased by 63%, not the best per se. And then for the entire year, decreased by 48.9%, and sales decreased by 15.4%. And over quarter from the last quarter of the past 2 years, they decreased 22%. So definitely a little bit of something, it's not the thing that you want to see the most, which is why I'm not set on buying this stock. I think there's a lot to watch and a lot to see, and a little bit more to look into before I decide on buying this stock. But showing you a little bit on their ROCE, the return on capital employed, a very important metric that I really do believe is important to use. We'll just see it has slowly been decreasing quarter over quarter ever since December of 2021. but year over year, it is still kind of doing the same, at 21% in December or in 2022 compared to 33% in 2021. Not the best, but the only reason why I'm feeling a little bit like understanding, I guess, of the situation is because, of the industry that they're in and the macro factors that are affecting them. A ton of different asset management companies such as BlackRock or Invesco are all going through the same thing. And it does make sense for this to happen. If all goes well, this could just be a potential incredible buying opportunity for this company. So I'm gonna go ahead and show you a little bit. At the end of December, as we saw, 1.7 billion in cash and cash equivalents. Oh, sorry, this is no. They had a 1.7 billion in cash and cash equivalents. They had 1.5 billion at the end of 2021. They returned a ton of money to shareholders during the year. This is a very strong financial position. And then as of February 2nd, they had a forward P of 12.8. They made that massive run up in price, so that's why it's a little bit higher now. But remember, they have a 36-year streak of dividend growth, which I don't see slowing down anytime soon. Looking a little bit more into Rowe and a little bit other stuff, they had revenue of 1.52 billion for the quarter, down 1.96 billion, but it only missed estimates by $10 million. So it wasn't like Rowe's coming out here and just dropping a bombshell on everybody like, oh wow, we're just doing terrible, revenue's down, revenue this. No, estimates were kind of in this guideline and it's expected. Okay, it's not like this company is just doing bad because the company itself is poor. It's not that situation. And then the latest quarter, whenever you go on an adjusted basis, earnings per share were at $1.74, and it beat the analyst consensus by 3 cents. So we are still looking pretty solid in that sense. And then they have a strong balance sheet. The company paid an annual dividend of $4.80 per share, bought back 6.8 million shares, reduces the weighted amount of shares outstanding to 224.3 million, the lowest year-end level since the company's IPO. So this is a great time to buy, just in the sense of if you're looking at price-wise and the value you might be getting per dollar. I mean, we've made a massive dip in price recently. Each share you're going to be buying now is going to be a little bit more of ownership in the company than ever before. Looking very solid. I wanted to point out also, just looking at everything, earnings per share expected to grow from 671 to 717, sales from 6.07 billion to 6.42 billion, but a 6%, 5.7% growth. Pretty solid, especially in this industry and with the way things are looking. It's very hard to predict the market right now with all the different catastrophes going around, interest rates, inflation, markets, this and that. And then I also wanted to show you on Chaikin Power Pulse, just a little thing I pay for. Rowe is said to be bullish, and not many stocks do get a bullish rating. Financials are very bullish. Earnings and technicals are both kind of mid. And experts are pretty bullish on this. So this is looking very solid. Just in this sense, I do see there's a lot of upside potential for this company to come in the next few months, in the next few years. If I were to buy this company, it would be something that I plan on holding for a long term and hoping to just kind of squeeze within my portfolio and continue to add. This is my Google Sheets right here, my portfolio tracker. I'm working on getting it to where you can put in your brokerage automatically. You don't have to manually input all this different stuff, and it uploads. Like if you put in a buy order, it'll do that in the sheet, and then like dividend calendar, knowing how much you're expected to make, automatically updating, and a few more metrics in this that I do believe will be very important. But that is going to wrap it up for this video. So as of now, I plan on buying the stock, but if anything changes, I will let you guys know. Leave a comment below what you think of Rowe price, ticker TROW. Check out M1 Finance if you haven't already. Use the link in the description down below for some free money. Deposit 100, get 100 back. Thank you again for making it to the end, and I will see you at the next video.